Thursday, the 31st of October. Hello, everyone, and welcome to Your Frontier opening bell. We're still here in Riyadh, the venue of the 8th edition of the Future Investment Initiative Institute's annual summit. Of course, the summit entered its third and the final lap today. But before we get into some of the highlights of that particular summit here, let's take a quick run through the markets. The markets in Nigeria was adjusting to the end of the month positioned by asset managers and fund managers and others, just as we saw the market get a whole raft of earnings from Lafarge, third largest cement maker. Boasman reported its 9 months earnings as well. We've got quite a lot also outside the industrial goods, consumer goods. Nestle reported its 9 months earnings, reporting hundreds of billions in net losses for the first 9 months of this year. They've got from the banking sector as well, including the parent company of First Bank of Nigeria, that's FBN Holdings PLC. We'll get to that a little bit on Access Bank towards the end of the show. But broadly speaking, investors continue to sell down on some of the biggest names of the Nigerian market. MTN Nigeria shares was hit yesterday, despite the banking sector making about 1.7% on the day. The BRVM in Cote d'Ivoire, the composite, was better by 0.54%. And you can see the screen, the rest of the region were a little bit in the red. The Cairo stock market finishing for today, but Wednesday was 0.81%. On the EGX 30, the Nairobi post was down by 0.5%, while the GSE in South Africa was down 0.62%. The stock markets bit choppy. We'll get to a bit more on the markets later, but let's move on. And of course, we got the FII 8 summit here in Riyadh, Saudi Arabia, getting to its final finishing line today. Was been a lot of plenary sessions focusing on energy, Africa in key focus. What's the future of energy in Africa and how to get a just energy transition for the continent? But when you look at the global space, and that's what His Excellency, the Minister of Finance for the Kingdom of Saudi Arabia, Al-Jadaan, spoke about yesterday, when he spoke about the need for world leaders, policymakers, to go for what he calls more collaboration to mitigate the impact of geopolitics, the crisis between Russia and Ukraine in the Middle East as well, and what that will mean for the future global economic growth. Al-Jadaan harps on the need for that collaboration, relationships, and building bridges across the global economic developing economies divide to move the global economy forward. That's talking about infinite horizons. Let's take a listen to him.
Overall, I think a lot of people feel that the global economy is proving to be a lot more resilient than what people thought. Inflation is coming under control. We are at the last mile of bringing inflation down, and I think overall we are getting into a soft landing, as it is called. But that is not actually even globally. I mean, there are uneven situations within regions and within countries where there are countries which are still really struggling. Debt is a big issue. Sovereign debt is a serious challenge that we discussed extensively globally, and I'm working as the chair of the IMFC with the IMF, the World Bank, the G20, to try and make sure that we bring the world into a path of sustainable growth and lower debt rather than the current trajectory of difficult growth and higher debt. Two things. I think fragmentation is getting more serious, if I want to prescribe it shortly. That said, I think we need to be very careful when describing this. I mean, international trade is actually growing. Despite all the rhetoric, despite all the negative news that we hear globally, global trade is actually growing.
For now, we don't know who wins the U.S. election.
That's right, but regardless of who wins the election, we had both sides of the aisle in the White House, and under both, still trade has grown. That said, there are obviously serious restrictions that are being put by nations year after year, and that impacts global trade. I think currently, under the current circumstances of serious geopolitical uncertainties, we need to build bridges rather than really burn them. Global communities need to come together. There are serious challenges around the world that cannot be resolved by one country alone, and therefore cooperative approach is necessary. I can tell you firsthand that when we discussed over the last year how we are going to deal with the IMF capitalization, how we are going to deal with the IMF surcharges and charges for borrowing countries, the whole global community came together and voted unanimously in favor of multilateralism. So that gives me hope and confirms my optimist approach. Even though there are challenges, still I think the global community feels the importance of multilateralism. This is one of the brightest spots in the world in terms of what investors are looking for. What investors look for, in brief, is return and risk return adjustment. So they are looking for a stable place to invest. They are looking for long-term plans. They are looking for leadership who are bold and able to make tough decisions. They are looking for an environment where public consultation is there, that there is a very clear communication of what the plans are. They are looking for a society that is young and vibrant, well-educated and engaged and enthusiastic about what's happening in the country. They are looking for a dynamic regulatory framework that is conducive and supportive and enabling to the private sector. And we are strong believers. I mean, no matter how much resources as a country you have, you cannot do what you need to do without the private sector. And if you have the enabling environment, that's what the private sector needs. I can tell you a very enlightening quote from a prominent investor who was here yesterday when I asked him, why are you doing it? And the question or the response was, I really did not come here for Saudi Vision promises. I came here for what Saudi Vision delivered. And what it delivered actually a lot. If you look at our GDP, the non-oil GDP for a country like Saudi Arabia, this is significant. The non-oil GDP now represents about 52% of the economy. Unemployment from what it was when we started for Saudis, 13%, now it's at 7.1%. We had a target of 7% in 2030. We are about to hit that target. We mobilized the resources of the country in terms of human capital significantly. Women empowerment has been a key pillar of what Saudi Vision is about, and the leadership have supported that enablement big time. Moving from almost 17% when we started Vision of women participation in the workforce to where we are now, which is 35%, north of 35%. And our target for 2030 was 30%. And we thought we were too optimists. Well, I think we are targeting actually more than 35, around 40%. And I think we will be able to achieve that. I mean, if you look at the women participation today, not only as employees, but also as entrepreneurs, it is significant.
So let's get back out of the summit here in Saudi, the FR8 summit, back into the African continent. One of the biggest news in the banking sector was the announcement on Tuesday by the Capital Markets Authority of Kenya, saying it's given conditional approval for Access Bank of Nigeria PLC to buy 100% equity stake in the National Bank of Kenya. That was a big announcement. That announcement came just a few days after Access Bank in Nigeria announced its 2005 to 2007 global expansion. Part of that includes entry into other key markets, not just in Africa, but around the world. Kenya was one of them. Roosevelt Ogbonna, who did the press briefing, talked about the 9 months earnings of Access Bank, but focused a whole lot more on why entry into key markets in Africa is very important for this huge bank that is considered quite a whole lot more to dig in a whole lot better than it's done since it came into existence. And of course, looking at what the future of banking will be, not just within the Nigerian market, not just within Africa, but for the rest of the continent. Let's take a quick listen to Roosevelt Ogbonna, the Group Managing Director and CEO at Access Bank Nigeria, for that briefing.
Across the world today, when conversations about the continent, either in finance, politics, or anything else is being discussed, you don't find African banks on the table or African institutions on the table. And so decisions that when they're taken impact the continent without us having to be a voice that determines how that impact will work. We want to break that mold, but want to do so by earning the respect, ensuring that the nature of friends we keep and the people we are close associates with are those who make the calls so that we're invited to the table because we've earned it. And to do so, we understand that we have to operate in markets that are global. That's why we're in London as the most profitable bank in that market. That's why we're in markets like Hong Kong. If you look at the world today, you see that there are 5 global markets, not the fact that they're the richest pool. There might be some of them. So you have New York, you have London, you have Hong Kong, you have Paris, and you have Tokyo. We're in 3 of those 5 markets. By next year, fourth quarter of 2025, even if we slip by first quarter of 2026, we'll have Access USA. We're going to be in the US market. Tokyo is not for this investment cycle. So we will be in global markets and we'll have global conversations dealing with different counterparties who operate across the world. We talked about being Africa's gateway to the world. I think when we started that journey, one of the things that was clear to us is that if you had to be the bank that catalyzed trade and payments in the continent, you needed scale. So we started something we refer to as our aggregator strategy. There is no point being a Pan-African bank when you have zero impact. So it was very clear to us that in every market, we have to compete locally and we have to be a dominant bank in the local market. Of our 19 markets that will be in the continent by 2027, 8 of those markets will be a top 3 bank. In 15 of those markets will be a top 10 bank. In 11 of them will be a top 5 bank. There are only 2 banks or 2 markets where we don't believe will be top 10 by 2025. That's South Africa and Kenya. Kenya we will try, because I think given the numbers we've seen, we might end up at number 12. So 12 to top 10 might be a lot of work, but it's doable. South Africa, I fear that we might not get there except the acceptance level of a Nigerian business changes in South Africa. It's work in progress, but we're in the market and we're going to push as aggressively as we can. Now, but why is it relevant to build scale in those markets? I said we want to be a local bank, firstly, employing local talent, impacting the local economy, working with the local governments or the sovereigns in those markets to make an impact in the markets. But I think importantly, it means that we then have the scale and the size to be able to then force cross-border trade to happen. Now, we have also have a benefit because, from a trade perspective, the most dominant trade banks in the continent were the international banks, or traditionally have been the international banks. So the cities of this world, the Standard Chartered, Societe Generales of this world, BNP Paribas. But they are leaving the continent. The banks who will get the benefit of that exit are banks who have built the scale in those local markets. We're very deliberate in terms of the markets we pick. Now, Africa has 54, 55 countries, but we don't want to be in all 55. We will do business in all 55, but we don't want to have a physical presence in all 55. So which markets have we chosen and why? There are 5 things we look out for. The first is that we're looking for markets where there's rule of law and respect of contracts. The second is that we're looking for markets where there's investor openness and friendliness. So as in they show that truly they value partnerships and new investments coming into their markets. The third is market where the quality of education and skill is sufficient. So we are not challenged from a bench strength perspective. Because the question will be, who will manage all of these things you are creating? It cannot be Nigerians are going to Botswana, Nigerians are going to Congo, Nigerians, it will not work. And after a while, those markets will begin to revolt. So we need local markets where there's enough talent and skill to support the growth. What will interest you is that the quality of education in many markets outside of Nigeria will surprise you. I'm not sure it will be a surprise because we know that Nigeria's educational system has been challenged for many years. So the quality of talent that we have in Southern Africa and East Africa is actually amazing. And we're thinking of reverse talent pool, bringing them here. Fourth is that we look for markets that there's a lot of cross-border trade. Markets where there's significant trading amongst themselves. Now, if the African Continental Free Trade Agreement works, the AFTA office believes that they can move the continental trade from 16% to 60%. Now, let's even say they don't get there. And all they do is from 16 to 20. Significant increase in continental trade and flows that happen. With the international banks pulling out, there has to be a local bank, a local African bank who is local in every market that takes significant advantage of those opportunities.
Also, let's rest it there for today's special edition of your Frontier Open Bear from Riyadh in Saudi Arabia. Of course, we're wrapping up today the Future Investment Initiative Institute's Annual Summit, the 8th edition here in Riyadh, Saudi Arabia. I am Bosi Lamafai. I'll see you soon.